I mean, the news likes to hyperbolize everything. Could you imagine if Fox News and MSNBC and all those things were around during the 1940s?
Right.
What would the headlines have been then when we're actively in a global world war, right? Like right now they
Yeah.
make it seem like we're in a global world war. We're not even close to it. I'm building concentrated indices with
Yeah.
my emerging tech industries, very concentrated industry. That's why I don't like a lot of the ETFs out there because they're like 30, 40, 50 holdings and it's like by the time you add all that exposure, like the winners offset the losers and you don't really get great returns. I want
Right.
concentration, right? No one got filthy rich by being diversified. Like that's never happened. I mean, I guess Warren Buffett did, but it took him his entire lifetime. And so when one thing is growing exponentially and the other thing is growing linearly, the gap between the two gets bigger and bigger and bigger over time. Yes, the same will be true with artificial intelligence, if not more true than it was with internet titans.
Hi, and welcome to Being Exponential with Luke Lango, where we'll discuss the economy, markets, technology, and lifestyle, all from an exponential perspective. I'm your host, Brooke. It is June 17th. Let's dive right in. Hey, Luke, I know we missed a week there. I think you were in Montana with your family. How was that?
Yeah, out in Montana. Great. Up by Flathead Lake, just south of Glacier National Park. My family's from there, many generations up there, so used to spend all my summers there. And now that I have kiddos, take the little ones up there for a week or two every summer. It's great to break away. As tech forward as I am, as much as I love technology and
Right.
use technology throughout my life, it is fun sometimes just to break away from all of it. Though I will say one funny little tidbit. Very poor Wi-Fi and connectivity where I was,
Yeah.
obviously. But Starlink is available and it is blazingly fast, almost faster than my internet here at home in Phoenix, Arizona. So it is funny that even when you try to break away from tech in today's world, you never really truly break away entirely. And that new tech is coming to kind of not infiltrate, but proliferate throughout all aspects of our economy, of our society, of our lives, and through every region as well. So that I found that to be a little funny tidbit. But nonetheless, yes, it was great to break away from tech for a bit, do some lake stuff, do some hiking, see some bison and deer and bear, though you never see a moose. Moose are so rare these days. But
Hmm.
yeah, a lot of fun. And if anybody out there likes huckleberries, Montana's a place to get huckleberries, huckleberry pie, huckleberry cobbler, huckleberry ice cream. Anybody wants to send some huckleberries my way, I'll take them. Huckleberries are great. So had a good time.
Awesome. Awesome. All right. Yeah, I mean, I'd venture to say it's almost necessary to break away from technology at times. You can't be too locked in, right?
Abstinence, right? We talked about that a few
Yeah.
weeks ago. Abstinence.
Yeah, definitely. All right, so let's dive right into the episode. Big things have happened in the past week, past 2 weeks. I want to start with a more geopolitical issue. Israel and Iran, they have been dropping
Right.
bombs back and forth. Things seem to be getting heated, but the markets did not shift as much as we thought they would. Can you dive into that?
Yeah, I mean it is really interesting because it does look like war is coming, like actual war. If you look at Polymarket, one of the betting sites out there, the odds of U.S. military action against Iran, I'm looking at it right now, it's up to 70% before August. It was 40% yesterday and, close to zero about a month ago. So the market does seem to be at least prepping for war. And that's consistent with the hard ball talk that Trump has been issuing in the last several weeks, the last several days, really. He wants unconditional surrender were the words he used. He essentially wants to end their nuclear program. So it does look like war war is coming. But you're right, the markets are not really reacting to it. I mean, the markets are down today. They were down on Friday, but they had a big rebound on Monday. So the markets really aren't reacting all that much. On a net basis, the market's really gone nowhere since that first Israeli airstrike against Iran on late Thursday night. The markets have really gone nowhere since then. We had a crash, a rebound, and then sort of a
Yeah.
flat line. So that's really interesting. And to me, what it says is this is noise. Like, I hate to call it noise because war is tragedy when,
Of course.
when there are airstrikes, people are dying, buildings are damaged, lives are disrupted. It is a tragedy. It is very, very, very sad. So I hate to call it noise, but in the lens of the markets, it is proving to be noise. And I think it is noise because I think it's going to be short term in nature. And then I think what's long term in nature is AI, right? If it weren't for AI, if it weren't for the exponential technological progress we are seeing across the economy right now, the market would really care about what's happening in the Middle East. It would be the focus of the market, and the market would swing violently 2% higher, 2% lower on a daily basis based on developments in the Middle East. But because we have AI, it gives investors something to look at
Right.
beyond past this geopolitical turmoil, right? Knowing that probably what's going to happen here is US plays tough ball, maybe there's some military action, but ultimately they back Iran into a corner and there's a diplomatic resolution and we move past this by the end of July or August and we just, we move on to something else. So why
Definitely.
focus on this, 4 to 6 week episode when we know that by August this is probably all going to be in the rearview mirror and what's going to be the focus again? AI. So the market's kind of just skipping ahead and saying, all right, let's play this drama out, let it happen. I'm going to continue to focus on AI, on technology, on developments therein, because the stuff that's happening there is overwhelmingly positive right now. That's where our
Mm.
focus is. That's the signal in the market. This geopolitical stuff is the noise. And again, I hate to call it noise because there are real tragedies involved with it. So calling it noise is, uh, I would say, I'm not being sensitive there, and I apologize for that. But through the lens of the markets,
Of
it
course.
is noise.
Yeah, you're not being intentionally callous. It's almost you're just defining it as what it is. Now, I know oil or the energy sector had one of its biggest drops in like a couple of years, but it's safe to say that that didn't really proliferate throughout the market.
No, I mean what's really interesting is that actually the move in energy stocks that's proved durable is not the spike in oil prices or prices or the drop in oil prices or gas prices or anything really directly related to the Middle East. The the durable move is the move we've seen in nuclear energy stocks. That
Mm,
we've seen your global X uranium ETF surge to 52-week highs. We've seen the miners ETF URNM also surge to 52-week highs. Oklo has been screaming higher. New Scale SMRs, the ticker there has been screaming higher. Constellation, Vistra, these stocks are absolutely on fire. That's the durable move. And again, this goes to the fact that the market's kind of looking past this short term noise, oil price volatility, gas price volatility, Middle East tensions, and instead looking at the bigger picture, seeing the forest for the trees here, which is that we need to stop relying on the Middle East for all this stuff. Like, here's the big picture. We need to power our AI ambitions. AI requires a lot of power. We need to have the consistent power load to cost effectively fuel all of our AI hopes and dreams and desires. If we're relying on oil and gas to do that, and oil and
mm,
gas are subject to these volatile price swings because of never ending conflicts in the Middle East, then we are going to have a forever volatile energy supply chain for our AI data centers. That's not going to cut it. We can't do that. We need to have reliable power, always cost-effective power, power that's not being disrupted by wars, and that is nuclear energy power. So before all of this, nuclear energy was the go-to kind of preferred power source for AI data centers. Now it's just like almost there's no questions asked. This is where you got to go if you're going to create AI data centers. And indeed, we're seeing more deals being struck in this space that are creating more nuclear reactors. SMRs are becoming a thing. And so to me, that's the real big energy takeaway of this
Mhm.
Iran-Israeli conflict is that nuclear energy, that renaissance that we're seeing is only getting bigger and bigger and bigger. And you need to invest in these uranium stocks, in these nuclear stocks. That's the big investment takeaway.
Wow, fascinating. Yeah, it seems like the more interconnected we get, the less it'll have an effect. Maybe back then it was the effect of the unknown. We don't necessarily know what's happening, but now we can see it. You can see it on your phone on TikTok, right?
Right, exactly. Yep.
Fascinating. Let's move on to the Fed. I know they met.
Mhm.
There were no cuts or anything proposed. So what can you break that down for us? What?
As of this recording is Tuesday, June 17th. They're meeting and then they have their announcement tomorrow on Wednesday, June 18th. They're not going to cut rates tomorrow, but if you kind of look at, I'll screen share with you the outlook for their rate cuts over the next several months. You can see here, no cut priced in for tomorrow, that June 18th meeting. Only 15% odds of a cut in the July meeting. That pops up to about 50% for the September meeting and 50% for the October meeting. The first full point cut's not priced in until October, and really only 1 to 2 cuts expected by the end of the year. A full 2 cuts priced in by January 26th. So essentially, what the market's saying is that they're probably not going to start cutting until September, October, and they'll have 2 cuts by January of 26. And then these longer term projections are kind of meaningless because they're so far out. Those are going to change so much before anything happens there. So,
Right.
anyways, the market's looking at first cut by September, October, 2 cuts by January 26. That feels a little bit like an undershoot to me because when
Hmm.
I look at what the other banks in the world are doing, this is a really important chart in my opinion. The blue line is the federal fund rate, the our Fed, the United States Fed. Green is ECB, European Central Bank. Orange is Canada, Bank of Canada, BOC. As you can see, they move in tandem, right? The blue, orange,
Right.
and green lines all move in tandem. When one's hiking, they're all hiking. When one's cutting, they're all cutting, right? They pretty much move in tandem. Right now, you can see the ECB and BOC are cutting pretty extensively, right? And these are pretty straight line drops. The Fed did join them, but then has stopped since December, and they've been on hold while the others have been cutting. That's not going to last, right? They're going to play catch up, and so we're down at 2.75 on the BOC rate. We're down at 2.15 on the ECB rate. We're at 4.25 on the Fed rate. I don't think that delta really is going to exist for that much longer. As you can see over here, when we had a big delta between the blue line, the orange line, and the green line, the blue line caught up to the orange and the green. Same with here back in 08, 07, 08, blue line way above orange and green. It eventually caught up to them and fell below them, actually. Same with, around COVID, 2019 going into 2020, blue above orange and green, caught up to them eventually. I think this blue is going to catch up to that orange and green. So I think we're going to get more than 2 cuts in the back half of 2025 going into the first half of 26. And when you look at the bond market, the 2 year treasury yield, it's significantly lower than where the Fed funds rate is. And so I think they're going to continue to cut until it falls below the 2 year yield as well. Right now, that's 1 cut, but as they keep cutting, that 2 year is going to keep dropping. So I think we're going to get maybe 3 to 4 cuts by January of 26. And that's what should be happening. We're getting weak economic data. The consumer is slowing. The labor market is cracking. Inflation is proving pretty tame. We got the import export price report today. That was pretty soft. CPI reports have been pretty
Hmm.
soft. PC reports have been pretty soft. So I think they can and should be cutting. They're not going to cut tomorrow. They probably won't cut in July, but I think they're going to cut pretty extensively in the last several months of 25 into the first few months of 26. And that really matters for technology stocks, for AI stocks, because that's fuel on the fire. When we think about the parallel between the AI boom and the dot-com boom, internet stocks really got going. If we look here at this chart, when the Fed started cutting rates back here in 98. Okay, so the Fed was basically on hold from early 97 to late 98. Then late 98, they were at 5.5 by that was September 98. By November 98, they were at 4.75. So that's 3 cuts, right? 5.5 to 4.75. That's 75 basis points of cuts. That's 3 cuts. Those 3 cuts in the last few months in 98, that's what set the stage for 1999, which was the best year ever for the NASDAQ, the best year ever for tech stocks. I think the entire NASDAQ index rose 100% in 1999. Again, the best year ever for tech stocks. Now, granted, that was the final year of the dot-com boom, and you eventually had a bust on the other side of that. But my point is, the rate cuts in the middle, or let's say the rate cuts in the sixth or seventh inning of the dot-com boom, led to a super exciting, super profitable eighth and ninth inning of that boom. I see similar setup today. Okay. I think I don't think we're in the sixth or seventh inning. Maybe we're in the third or fourth inning of the AI boom, but rate cuts in the back half of 25 going into the first half of 26 should add fuel to the fire and make for a really exciting fifth, sixth, seventh, eighth inning of this boom. So I'm really excited for the prospect for rate cuts to come into this market and re-energize what has been kind of a sleepy AI boom recently. Over the past
Right.
several weeks, we've kind of had flattish action in the S&P. I think that's going to awaken. Positive price action is going to reawaken when these rate cuts do come into the fold. And again, I think we're going to get more and faster rate cuts than what the market is expecting in the second half of 2025.
Fantastic. So now you did mention no cuts in July. Another thing that's happening in July, specifically July 9th, is the end of the 90-day tariff pause.
Right.
What can we expect? What's going to happen on that day?
Yeah, I think nothing. I think a big fat nothing burger. I mean, like yawn, stretch, business as usual. I don't think anything's going to happen. I mean, at the end of the day, it's just become clear in the actions and words of the White House, whether it's President Trump or Bissent or Lutnick, whoever it may be, these guys are trying to get deals done. They're not trying to start a war, a trade war. They're trying to get deals done. So if deals aren't done by the 90-day deadline, then they're going to extend it another 90 days. And then if they don't get done by that 90 days, they're going to get another 90 days. And if they're not done by that 90 days, we're going to get another 90 days. I think it's just going to be a rolling 90-day deadline
Mhm.
until we get deals done. It may be a rolling 90-day deadline for 4 years. I don't know. But I think it's just going to keep on rolling until we get deals done. Apparently, the UK and US did sign some semblance of a deal. I don't know. That's what they're saying. They signed some semblance
Mhm.
of a deal. Apparently, Japan and the US walked away from a deal. India didn't have time to approach Trump at the G7 meeting. So, like, the the status of deals is all over the place right now. From we've kind of started talking to we've signed a formal trade deal, from first inning to ninth inning, they're all over the place. And so I think they're just going to keep progressing and they're just going to keep extending the deadline and allow for these deals to happen. So again, I think, geopolitics, I think a lot of this is just noise right now. It's a lot of bark, not a lot of bite, whether we're talking about the war in the Middle East or whether we're talking about all these trade deals and tariffs and exemptions and all that stuff. I think it's all noise. And the signal, again, the signal is AI. That's where I'm focusing. I'm focusing on the exponential technological developments happening in artificial intelligence. And that is what is going to drive this market higher, despite a lot of this, geopolitical and trade chaos and noise, if you
Right.
will.
Yeah, it's pretty funny. It kind of reminds me of hitting the snooze button when you're trying to wake up. Just 5 more minutes. 5 more minutes.
Yeah, I mean the acronym is TACA, right? Trump always
Right.
chickens out. I think there's a political slant to that. I think more broadly, it's just like everybody always chickens out. Iako, I guess you would call it, right? And
Yeah.
that's the benefit of globalization. Nobody really wants to go to war, whether it's military war or trade war or any sort of war. Nobody really wants to go to war because we're all so damn connected these days,
It'll
right?
cost too much. Yeah.
Yeah, it costs the opportunity cost to me to going to war. It's like I got to chop off my right arm to
Hmm.
fight you. Like I don't want to do that. I want to keep both my arms, and so maybe I don't like you that much, but we'll hang out because I want to keep my arms. Like
Right.
that's the situation that globalization has created, and that's why I think globalization is beautiful. I mean,
Mm.
wartime deaths are as low as they've ever been in human history, like recorded human history. The amount of people we are losing, civilians we are losing to deaths in war, is at an all-time low. That is a byproduct of globalization. That is a beautiful thing. There is nothing more valuable in the world than life itself. Lifetime experiences and then maybe money, right? So
Yeah.
if we talk about life and time, that's what we want to maximize. globalization has allowed the world to maximize that. We are not losing lives to war, and people are getting to spend more time on this earth with the people they love and maximize their experiences. So that's a byproduct of globalization, and that's why it's not taco, it's IACO. Everybody always chickens out. China will chicken out. Iran will chicken out over in the Middle East. Israel will chicken out eventually. Trump will chicken out. UK will chicken out. Everybody's going to chicken out because we all just want to shake hands and have diplomacy at the end of the day because we're all so connected. So that's why I think globalization is like the ultimate put option on the markets, if you will. That's why geopolitical stuff is mostly noise and the signal is AI.
Right. Awesome. Yeah, I feel the same way. Generally, it's for as much negative talk, as much violence as we see on the news, or and just in general, it is the safest and most peaceful time in history as of today. So you gotta take the noise with a grain of salt, right?
I mean, the news likes to hyperbolize everything. Could you imagine if Fox News and MSNBC and all those things were around during the 1940s?
Right.
What would the headlines have been then when we're actively in a global world war, right? Like right now they
Yeah.
make it seem like we're in a global world war. We're not even close to it, you know? So it's just, yeah, I think things get hyperbolized because of media and sensationalized and all that stuff. But at the end of the day, like look at the markets, follow the money,
Yeah.
right? What's the money doing? Money's not really moving in response to this stuff. It's moving in response to AI developments and nuclear energy progress and so there's good stuff happening on the space front as well. We'll talk about that in a moment. That's what's moving markets, not this geopolitical stuff.
Okay. Yeah. So let's talk about market action. Actually, stocks have been plateauing at all-time highs for a couple of weeks now. It seems we've hit not quite a standstill, but the movement hasn't been there. Can you expand on that?
Yeah, I mean, the stock market has basically been flat for I want to say like 20 days, like 20 straight days. You've
Mhm.
gone nowhere. The S&P 500 over the last 20 days is up 0.5%, so it's been flat for 20 days. But despite that flattish action at the headline level, everyone's like, "Oh, stocks can't go higher because of all this geopolitical drama and chaos and blah 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 blah." But in the meantime, you are getting certain sectors of the technology world specifically that are absolutely blasting through the roof amidst this geopolitical drama. For example, we've talked about this. I've created these custom indices that focus on the emerging technology trends that we like most. And a lot of those indices have been absolutely soaring over the last 20 days while the market has been at a standstill. Let me share this chart with you. Here's my quantum 4 index. It's the four stocks, pure play quantum stocks in the market. Ion Q, quantum computing, D-Wave systems, and Rigetti. That's up 24% in the last 20 days, while the S&P 500 is up 0.65%. That's that's pretty fantastic. I mean, that's a fantastic return. 25% in 20 days while the S&P is flat. Who wouldn't take that, right? And that's
Right.
because we're seeing really exciting developments in the quantum field. IonQ is out here saying they want to be the NVIDIA of quantum computing. Jensen Huang is out here talking about how quantum applications are coming in the next few years and they're going to be big. I mean, there's a whole revolution happening in quantum computing right now that does not give any shits for lack of a better word about what's going on in Iran or Israel or trade negotiations between the US and China. It doesn't care about that stuff. This stuff is marching forward and it's really promising technology with huge economic implications and investors are bidding up the stock. So market's flat, but quantum stocks are up more than 20%. Same deal over in nuclear. We kind of talked about nuclear, right? I have my nuclear 10 index 10 nuclear energy stocks. It includes names like Constellation and Vistra and Oklo and SMR. Kind of mentioned those already. BWXT is another one in there. That index is up 34% over the last 20 days, while the S&P 500 has been pretty much flat. So quantum's up 25%, nuclear is up more than 30%. We talked about why. Nuclear energy really having a moment with these AI data centers. Now all this Middle East conflict sort of underscores, you know what, we really can't rely on any of that. So we need to do more nuclear, more nuclear, more nuclear. And then even today, we got more news because that big bill that's making its way through Washington, D.C., The latest iteration of that phases out solar and wind tax credits completely by 2028, but keeps nuclear tax credits in there until 2036. So if that passes, there's an 8-year window there
Yeah.
where solar and wind don't get any tax credits and nuclear gets full tax credits. What do you think's going to happen in that 8-year window? Nuclear project after nuclear project after nuclear project after nuclear project. And it reminded me of when a couple weeks ago we talked about Sunrun. Remember, Sunrun was one of the breakout stocks. It was one of the stocks that was just absolutely flying, going exponential that week. And I said, folks, stay away from that. Sunrun, I think solar is dead. I think the value proposition of solar energy and wind energy has been obsoleted by the emergence of nuclear energy. What's happened to Sunrun stock since then? It's been absolutely crushed. I'm pulling it up the chart on another screen.
I actually
Um,
remember texting you about that when I got the news.
yeah, I
So,
mean, so I
oh,
think that week Sunrun it had gone from like $7 to like $12, and we're like, stay away from it. It's
right.
garbage. It's going to collapse. Then it collapsed down to $7, and today uh, Tuesday, June 17th, it's down 40% to below $6. So getting absolutely crushed. All those solar stocks are getting crushed. Enphase, I think, is down a whole bunch. Yeah, it's down 22% today. Solar Edge is down a whole bunch, 34% today. So these stocks are getting crushed, and they're going to keep getting crushed because
Mhm.
good old nuclear is obsoleting solar, and that was already happening. But now with this, if this bill does get passed, where solar credits are completely gone by 28, nuclear stays in until 36, you got an 8-year gap there. I mean, that's the nail in the coffin. So 6 feet under for solar and wind, but thousands of feet above for nuclear. So that's another, again, stocks are flat, nuclear is surging. And then space is another sector that's been hot as well too. I have my Space 3 index that includes Planet Labs, AST Space Mobile,
Mhm.
and Rocket Lab. That one's up more than 30% in the last 20 days when the market's flat. So quantum up 25, nuclear up 35, space up 30. This is because ASTS has been having a moment. That stock's been going crazy. Jeff Bezos is getting involved there. Blue Origin starting to play a role. They're having some big backers. I've always been a huge fan of AST Space Mobile. I talked about Montana with my Starlink stuff. Well,
Yeah.
if AST Space Mobile's constellation of satellites actually works, so the whole value prop there, the whole idea there is they're going to launch this constellation of satellites with their unique proprietary tech that's going to beam connectivity straight, cell phone, cellular connectivity straight from a satellite to your phone. So, places where you don't normally get cell signal, think an airplane, think a desolate place in Montana. Glacier National Park, for example, has no cell service. Places like that with AST technology, all of a sudden you have cell service. Is that a
Right.
good thing or a bad thing? Okay, maybe, we're talking about the abstinence trend. Maybe it's not a great thing because then people are like this all the time. But, from an emergency perspective or other perspectives like that, I mean, I, for one, hate paying for Wi Fi on a plane. I'd love to have cell service. That'd be awesome. So I think that's a really cool technology. I'm hugely bullish on that stock. They're having a moment, like I said. So space stocks are up more than 30% in the past 20 days. So this kind of comes full circle to this idea again. Yeah, the market's been at a standstill for the past 20 days, but that doesn't mean you have to be at a standstill because
Yeah.
exponential technological progress has not been at a standstill. Quantum evolving exponentially, nuclear evolving exponentially, space evolving exponentially. All of these stocks up more than 20, 25% in the last 20 days while the market's gone nowhere. So my kind of big message here is don't sit back on, your hands and just wait for this geopolitical drama to pass. Get active, get involved with exponential technological stocks that are roaring amidst this chaos, despite this chaos, and will keep roaring once the chaos passes. So that's
Yeah.
kind of what I want to really get across here is these things aren't slowing down. And I think you need to be involved with them, with these emerging tech trends, if you really want to maximize your profits in the stock market, especially amidst a lot of geopolitical and macroeconomic chaos, which probably won't die down for at least a few months, if not a few years.
Yeah. I'm speaking of the internet everywhere. I'm of the camp that the internet has no longer become a privilege. I think it's a utility. You almost have to access the internet to do almost
Yeah.
anything. It's
Yeah,
necessary.
and
People will have to use their own intuition to determine how much they use it, but it is become a necessary part of at least modern life in America. So I think it's a good thing overall. You,
I would agree with you. I would agree with you on that.
I would like to bring up since we saw a couple of the other indices, I'd love to see the AI builder and applier indices that you have too, just to see where we're sitting at with those.
Yeah, so those are my favorite indices out there. I'll pull them up right now. So quick recap for those that don't know. AI obviously has been everything in markets the last several years. So what we decided to do is say, hey, let's we don't like any of the AI ETFs out there. We think they're kind of we don't think they're great. They don't really focus on
Mm,
what you need to focus on. We think the AI boom is going to progress or is going to happen in two concurrent waves. The first wave is building AI builders, the companies building the infrastructure necessary to facilitate the AI boom. So, the chip makers, the companies that supply stuff to the chip makers, semiconductor equipment suppliers, lithography machines, data center operators, cooling equipment for data centers, all the components that go into data centers, then the fabrication sites. And then you have the power plays, Constellation, Vistra, that are powering these data centers. The whole just kind of supply chain of AI. That's your builders, your AI builder stocks. Then you have your AI applier stocks, and those are the ones that are taking that infrastructure and actually developing cool, novel, transformative AI applications on top of that infrastructure. All those data centers, all those fabs, et cetera, all those chips. The ones that are actually creating new AI apps that are going to change how you learn a language, Duolingo, that are going to change how police interact in the world, Axon, that are going to change how companies market, Salesforce, ServiceNow, stuff like that. So those are our builders and appliers. We think that that's
mm,
how the AI boom is, it's how it has evolved and how it will continue to evolve. So what we did is we built the AI Builders 15 and the AI Appliers 15. What we view as the 15 most important AI builder stocks in the market, and what we view as the 15 most important AI applier stocks in the market. Can't divulge all the names in those indices. They're, kind of behind a paywall for my subscribers, so unfortunately can't really go into what all 30 stocks are, but nonetheless can show you this. I mean, this is the AI Builders 15, the AI Appliers 15 versus the S&P 500 index since the start of the AI boom early 2023. As you can see, the AI Builders 15 is up, what, 280%, and the AI Appliers is up 290%, and the S&P 500 is up 56%. So it's lapping the S&P 500. We're talking, what, six times outperformance,
yeah.
5 to 6 times outperformance over the course of the last 2 to 3 years. That's amazing. And I think it's continuing. If you look at the past year, very interestingly, there has been a shift, and you can see in this chart sort of the white one, the builders boom, kind of happened first, and that was really kicking butt until about January of this year. And then they both had the drawdown with the trade war, and then a rebound of sorts. But the one that's really been kicking butt recently is the appliers. If you look at in the past year, the S&P 500 is up 9%. The builders index is up about 22%, but the appliers are up 70%. So I do think we are phase shifting a little bit into the appliers more than the builders, but
Right.
there's been so much good news with sovereign AI and with these AI infrastructure deals in the Middle East and with the $500 billion Project Stargate that is rolling out here in America. There is enough infrastructure momentum, infrastructure spending momentum, that I do think AI builder stocks will continue to be a great place to be, and that they will continue to outperform the markets by a wide margin. 2 to 1, more than 2 to 1 in the past year, 6 to 1 over the past, 2 to 3 years. I think they're going to continue to outperform by at least 2 to 1 for the next few months and few years. But appliers, I think, is where the real alpha is going to be had. I think those are the ones that, I mean, they're outperforming 7-1 the market in the last year. I think that's where you're going to get even bigger outperformance than with the builders. So want to own both builders and appliers, but I think now's the time to phase shift ever so gradually into that application layer of the AI boom. Again, names that we're talking Palantir, we're talking Axon, we're talking Duolingo, Intuit. They've been a huge surprise AI winner recently. Love what
Mm,
they're doing over there. Tempest AI, applying AI to healthcare. These are really interesting firms at the application layer that I think have a lot of potential so long as this AI boom keeps on pumping, which right now it's pumping pretty fast.
yeah. Would you think it's safe to say it's almost conservative? These numbers are conservative because it, AI still hasn't fully penetrated like the whole market yet, the whole job force.
You mean conservative, like the outperformance we've seen so far, that it's only going to get bigger?
Yeah.
Absolutely. I mean, look, that's the power of compounding, and that's the power of exponential returns. When you look at the internet, if you look at pull up a stock or a chart of the, I don't know, pick an internet stock, Amazon stock versus the S&P 500. If you go 1998 to 2004, there's some outperformance. But if you zoom out and then go 1999 to 2010, there's a lot more outperformance. Go to 2015, a lot more outperformance. Go to 2020, a lot more outperformance. Go to 2025, a lot more outperformance. The outperformance gap only gets bigger and bigger and bigger over time because technology evolves exponentially while the rest of the world evolves linearly. And so when one thing is growing exponentially and the other thing is growing linearly, the gap between the two gets bigger and bigger and bigger over time. Yes, the same will be true with artificial intelligence, if not more true than it was with internet titans. And I'm especially excited as we enter the part of the AI boom at the application layer where
Mm,
AI goes physical, where we get physical AI, where we start to get robotics in play, where we start to get autonomous vehicles in play. That's already happening. There are robots in factories across America doing very useful things. There are robots in kitchens across America doing very useful things. There are autonomous cars on streets across America doing very useful things. In China, UB Tech is selling a $20,000 humanoid robot to households. That is a huge development. We're starting to get some cool footage of Optimus in factories doing useful things. So we are starting to enter the physical AI era. That's going to be huge. Because when you start seeing AI in the physical world manifest itself in objects and devices around you, AI glasses, we'll talk about those later, that's when you start to see real big time economic impact. That's going to propel the exponential gap even wider.
amazing. Yeah, still on the ground floor, one could say for the AI boom. Um, you heard it here first.
Yes.
So I do want to talk about speaking of ground floors, the IPO market. I know we talked about that a couple of weeks ago. You
Mm-hmm.
mentioned once that starts getting hot, that's an indicator of bad things to come. I've heard a couple recently. Like Chime had its IPO, I believe.
Mm-hmm.
Can you share how you feel about the percolating of the IPO market?
Yeah, so I mean, this whole podcast so far, and every podcast episode we've done before, and everything I write about and everything I talk about is exceptionally bullish on artificial intelligence, right?
Right.
You will not find somebody more bullish on AI or AI stocks than me. But even as somebody who is supremely bullish on artificial intelligence and AI stocks and the whole AI market, I'm not ignorant or blind to the fact, and it is a fact, that eventually we will get a huge bust here.
Mm,
That's just how these things work. That's how new tech trends evolve. You get this, you get the birth of the new tech, you get this, exponential growth, and everyone gets excited. But then at some point, people get too excited. Expectations get too high. People get too greedy. And then what happens is you have to have a shaking out. You have to reset those expectations a little bit. You get a big crash, you get a lot of pain, and then you find some normalized expectations and you get the long-term growth phase. Look at the internet. We had that, we got Netscape launch in 94, late 94, 95, 96, 97, 98, 99. absolutely fantastic growth in internet technologies as well as internet stocks. Then you had a massive crash 2000, 2001, 2002.
Right.
Tech stocks lost more than 50% of their value. Then you found your footing, expectations normalized, they reset, and then since then it's been up and away in a durable growth phase for the internet and for internet stocks. AI is going to go through the same thing. Eventually, this AI boom will hit a bust. We're going to hit a top. We're going to crash 50% or more. Then we're going to find our footing. And then AI stocks are going to outperform for, 10, 15, 20, 25, 35, 40, maybe 50 years, right? That's how these things work. So the question isn't, are we going to get a bust at some point? We are, inevitably,
Mhm.
eventually. The question is when. And to answer that question, I'm looking at the IPO market because tech booms, the peak of tech booms, tend to be characterized by white hot IPO markets. Let me show you what I mean. So
Mhm.
here we have a chart of IPOs, kind of a time series chart of IPOs in the last several decades. There are spikes in this chart, as you can see. What this counts is the value, the total value of IPOs in a quarter. Okay. Look at this 1990s, boom. You see that big spike? When did that spike happen? Oh, first quarter of 2000. Huh. Isn't that when internet stocks peaked? You betcha. So right here, this huge IPO spike in IPO. I mean, we were doing what? We were doing like 100 billion or less in value and IPO value per quarter. Then all of a sudden, boom, we got up to 150, 170, and then we eclipsed 200. Like that's a spike. That's a white hot spike. That was your sell signal. Get out of the market. Same thing back here in '07, right? We had this mass, IPO volume was kind of staying below 200. Then we got this big old spike up to what, 270. It actually, let's see the actual number in '07. 220, no, 259 was the peak. Second quarter of '07. Second quarter of '07 isn't that was close to when the stock market peaked before the great financial crisis, right? Yep, yep, you
Right.
betcha.
Right.
That's pretty much exactly when the stock market peaked, right before the great financial crisis. So there you go, two for two. How about this spike right here? Where we got this spike in summer of 2015, right before the commodity crisis of 15, 16, which didn't cause a big stock market crash, but you did get a reset and a flat and bad market for quite a while. And then you had most recently, we all remember it, the SPAC boom, the IPO SPAC boom post COVID, right? Late 2020 into early 21. This was the first quarter of 21, and the numbers here were outrageous. What, first quarter of 21, we got um, more than 3,400 IPO and SPAC deals for an aggregate volume of $480 billion. Completely unprecedented. And yeah, that was your top signal. That was a good time to sell and then wait for the greed to leave the market. So when the IPO market gets red hot, that's usually your sign to head for the exits, which makes a ton of sense because IPO markets get white hot when you have a bunch of companies. Typically, IPO markets are good companies go public and investors pay up for them. Makes sense. Totally natural, totally normal,
Of
totally
course.
healthy. But when you get just shit companies, when you get these crap companies that aren't really doing anything but claim to be changing the world, and they go public, and then investors pay up for them, and you start seeing those stocks double and triple on their first trading day, and then that happens every single day, week after week, month after month, that just tells you that, well, one, these companies should not be going public, and they are going public, so eventually they're going to bust. And investors are just way too greedy. They're just blind to the risks. They would normally never pay up for companies like that, but because they're so greedy and so desperate for exposure to a new tech trend, they are paying up for it. So that combination of bad companies going public that shouldn't go public, and then investors just being blind to risk and paying up for them, yeah, that combination is what leads to big busts. So it makes a ton of fundamental sense, and that's why I'm watching the IPO market right now. As you can see in this chart, we're not there, right? We are not there quite yet. Only $167 billion in IPO value so far in the second quarter. First quarter was 170. Fourth quarter of 24 was 190. But to your point, Chime, Hinge Health, Circle, CoreWeave, we are starting to see a thawing of the IPO market. If this thawing continues, and I believe it will, probably in like 1 to 2 years, we're going to get one of these spikes. We're going to get one of these just like boom, all of a sudden we're probably doing 500 billion or 600 billion dollars in IPO volume in a quarter. You're getting thousands of deals, 4,000, 5,000 deals a quarter. That's when it's like, okay, that's white hot. Time to go for the exits. We're not there yet, but I think we will get there at the current trajectory in the next year or two. And that's going to be your sign to, okay, trim back positions, sell, head for the exits, wait for the bust, and then buy the dip on the other side, 2 to 3 years later after a 50% washout. That's how I think this is going to play out. My timing for this is the IPO market. That is what I am watching.
Gotcha. Okay. Yeah, something to look out for. I'd imagine we're going to see a bunch of, at that time, probably a bunch of phony AI companies. I remember one was, I think Boulder AI was just a company built on bullshit, apparently. So we'll probably see a bunch of those when the time comes. Does that sound right?
Yeah, yeah, it's when, I mean, 99 was the pets.com and the web
Yeah.
vans, and that's when they all IPO'd and everybody was paying up for them, and the business models broke down, and their earnings reports hit, and then all of a sudden, blah, and it all kind of came crashing down. 2021, obviously, we had a bunch of SPACs that were worthless. Nikola, right, the hydrogen trucking company, they just went completely bankrupt. And then a bunch of others that just completely flopped, right? They were just horrible business models, a lot riding that EV boom. So yeah, there was just it's when companies that aren't so great, zombie companies, if you will,
Hmm.
come forward and start acting like they're the shit. They got the swagger of a Facebook, they got the swagger of a Netflix, they got the swagger of an Amazon, but they're nothing close to that. And that's when things start to get ugly. So yeah, with this, it's going to be a bunch of AI startups that just emerged in the last year or two, now suddenly going public claiming they have the best AI model or the best AI chip or the
Right.
best AI this or the best AI that, and they don't, and they go flop, and then boom, the whole market kind of gets tanked with it as expectations get reset. Another thing to look at there is M&A activity, because the dot-com boom was also the peak of that was also characterized by a lot of unjustified M&A activity. Companies were just paying up for bigger companies were paying absurd premiums for smaller companies just to better equip themselves for the internet revolution. That's also a tell. We're not seeing a lot of that right now. Once we start to see some massive acquisitions from the big firms, that could be a warning sign as well. So M&A, IPO, watch those markets closely. When they get white hot, that's when this show's over.
Gotcha. Okay. So let's move on to exponential tech. We talked about the nuclear stocks earlier. They're just soaring, white hot. The global X uranium ETF looks like it's reached its 52-week highs.
Yep.
Can you tell us what's going on in nuclear? I mean, outside of what you've already
Yeah,
said.
yeah. I mean, you kind of already touched on the nuclear stuff. I mean, um, it was already being selected by big tech companies as the go-to power source for their AI data centers because it's clean.
Hmm.
Once constructed, it's cheap. It's very reliable. It's highly efficient. It's 24/7 constant power. So there were a lot of upsides to it. And it's really safe. If you look at the numbers out on it, it's actually really, really, really safe. Much safer than other energies, actually. So, it was already just based on logic alone, the go-to source for AI data centers, go-to power source for AI data centers. And now that's only going to increasingly become true because one, we're getting deregulation. Trump is removing red tape. A big, 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 big obstacle in the nuclear energy space, obviously, is the approval of new reactors. The approval process is super stringent, a lot of red tape. Trump just signed some executive orders to remove a lot of that red tape. So you're getting political tailwinds there now. And then now you have geopolitical tailwinds with this Middle East conflict, right? It seems
Right.
like, honestly, probably one of the reasons the market is yawning at this. It seems like these geopolitical conflicts in the Middle East happen, what, a few times every year? Like, I
Yeah.
mean, I've been doing this for more than 10 years now, and it seems literally every single year we get at least one of these geopolitical conflicts in the Middle East, if not multiple every single year. And some years we get four or five or six. It's like, Oh, here we go again. Here we go again. Here we go. Here we go. Here we go. And it's like if we're really trying to power our future, AI is our future. We don't want that power to come from an unreliable source like that. No, we want it to, make it domestic. Uranium's from Canada, uranium's from Australia, uranium's from Kazakhstan. Canada and Australia, really close allies, nothing to worry about the supply there. Kazakhstan, yeah, it's right next door to Russia. Maybe that's problematic in the future, but it hasn't been problematic so far. You're not hearing about a new geopolitical conflict in Kazakhstan every single year. No, not at
It's
all.
true.
Like,
Well,
when was the last
not
time you
yet,
heard about
right?
a geopolitical conflict in Kazakhstan? You don't. So it's just like, yeah, let's diversify away from that. Let's go to a place where the uranium supply is actually super shored up. That's nice. And then long-term nuclear fusion. So that's the big breakthrough that we're waiting to. And I think AI is going to help us get there sooner rather than later. So if you're looking at energy and AI are closely entangled, but forget nat gas, forget oil, forget solar, forget wind. It's all about nuclear. I really do think we could, people are like, oh, we're going to create this nice diversified energy mix. We're going to have some solar and some wind and some nuclear, blah, blah, blah. No. In the future, it's going to be all nuclear. That's what I really believe, especially once we get to fusion. Fusion is what powers the sun. If we can really harness that, create that on Earth, why do we need anything else? We don't need diversity at that point. You just need fusion. So the future is all nuclear, in my opinion. That's not priced into these stocks. I think a lot of them continue to go higher.
Definitely. Yeah, I personally believe the inception of fusion will be the thing that changes the world. Because why have we been going to war? Oil. If there's free energy for everybody, what are we going to fight about, right?
Right. Exactly.
Awesome. So I did also want to bring up sovereign AI. You did mention that a little bit earlier. I want you to expand on what that is for our viewers that don't know.
Yeah, sovereign AI is awesome. Sovereign AI is what I think the next big wave of the AI infrastructure spending boom. It's one of the reasons I'm still bullish on AI builder stocks, despite their recent underperformance relative to applier stocks. There's a new wave of money coming into AI infrastructure from government. So sovereign AI is essentially AI built by a country for a country to run that country. It is nation state AI. We're not talking AI like ChatGPT to write you a cute little poem or give you Russian recommendations or whatever it may be, some silly little task. We're talking big level AI to run a country, big level AI to manage a country's energy grids, big level AI to manage a country's missile defense systems, big level AI to help a country optimize their healthcare operations. That is what we are talking about. And that is happening right now. It's a big trend. I'm super bullish on it. I'm super excited about it. And I don't think it's going to slow down anytime soon. OpenAI just won a $200 million contract with the U.S. Department of Defense to supply technology to them for, I believe it's missile defense. I'm not 100% sure. I believe it's missile defense. I need to read the details a little bit further. But that's the sovereign AI movement. NVIDIA is teaming up with Germany to build them a sovereign AI for their whole country. The Middle East, all those deals when Trump was over there doing his tour, that was all about building sovereign AI off in the Middle East. So this is big time stuff. These are the deepest pockets in the world. Who has more money than the United States government, the German government, all those governments in the Middle East? Nobody. These are the biggest governments in the world, the deepest pockets in the world, and that money is now pouring into building their own AI. And it's a race that is only going to heat up because if you have the best AI as a country, the best sovereign AI, then you dominate. You absolutely dominate everybody else. So it's a race for domination. And I don't think it ends anytime soon.
Man, that is just like on an optimistic note. When you think about running any level of government, there's always a certain level of bureaucracy that the wheels move slowly. Inputting AI to just solve all of that, like I live in Baltimore. I can only imagine all the potholes will be gone if AI is in charge, right? We don't have to worry about this person getting the permits for this person, yada yada yada. That would be an amazing future.
Yeah, I mean, AI will just run the government, right? Like that's the whole thing. It's just AI runs the government. Everything is automated. Everything is AI generated. It's yeah, it's a much more efficient system.
Hmm.
And, for all the efforts that Doge had at cutting government spending and all that stuff, I mean, AI is actually a tool that needs to be used to really reduce government inefficiency or reduce government inefficiency, boost government efficiency. And I think that is going to happen very, very, very soon. So, deficits, debt ceilings, big problem right now. You want to claw your way out of that? Use AI. That's another big reason why sovereign AI is the next big growth wave of artificial intelligence and why these countries are pouring so much money into their own AI system. So, really excited about all that stuff.
Definitely. And we won't have to worry about corruption anymore, right? um,
Right.
so moving, still on the subject of AI, I want to talk about the chips market. You mentioned that we are moving from AI training to AI inferencing. Can you explain how that affects the demand for chips?
Yeah. So the market, when you're building an AI model, there's really two parts to it. There's training and inferencing. Training is, well, training the model, right? It's building a model that knows everything beforehand, so that when you ask it a question, it just kind of pulls into its database, right? Inferencing is more, okay, you give the model the skills to find the answer, but it doesn't necessarily know the answer beforehand. Um, Pre 2025, the entire AI market was obsessed with training. They thought the route to creating the best AI model was to train the best AI model. Get an AI model, train it on all the data that you have in the world so that it knows everything. It's this omniscient AI so that when you ask it a question, it already knows the answer, knows how to answer any question in the world. But when DeepSeek had their algorithmic breakthroughs in early 2025, where they created a very capable AI with very little pre training, it sort of told the rest of the industry, maybe we don't need to create these omniscient AI models. Maybe we just need to create an AI model that knows how to think, not what to think, which is really a fundamental belief in education. I remember all my teachers growing up, they were like, I could teach you that 2 plus 2 equals 4, but better yet, I'll teach you why 2 plus 2 equals 4. Because if you know why, then you can probably solve any other math problem out
Right.
there. And that's sort of what the AI model making industry is shifting towards, away from just training this model to know everything, towards giving it the inferencing skills to reason through problems that it doesn't know the answer to quite yet, but it has the skills to reason through them. Again, not what, but why or how. That is the market shift that we're seeing right now. And that has some implications for the supply chain because training and inferencing, I guess you could say, activate different parts of the supply chain. Money is flowing into the funnel. Okay, you got all this billions and tens of billions and hundreds of billions of dollars flowing into the AI supply chain funnel. In a training dominated market, that money is flowing to certain parts of the funnel. In an inferencing dominated market, it's flowing into different parts of the funnel. So while all this money continues to come into the AI infrastructure boom, it's going to flow to different end markets. Not entirely different end markets, nuance differences, but important enough that it could spell out the difference between winners in that AI supply chain over the next 12 to 24 months and losers in that AI supply chain over the next 24 months. For example, GPUs, NVIDIA's GPUs, graphic processing units, they were the heartbeat of the AI infrastructure boom until now. GPUs were great for training. They're not so great for inferencing. They're still good for inferencing, but when you're doing inferencing, you want more specialized chips. Maybe TPUs, these tensor processing units from Google, or different XPUs. XPUs are just essentially any processing unit outside of CPUs. So when you talk about XPUs, you got GPUs, you got TPUs, you got vision processing units, you got all these different specialized ones. And so in the inferencing world, all of a sudden you could see a lot more money that was flowing exclusively into NVIDIA GPUs. I think a lot of that money still flows into NVIDIA GPUs, but now some of it, 10%, 20%, who knows, some of that now shifts and flows into these other XPUs. And that's where I think you're going to see a lot more growth in maybe a name like Ambarella, or maybe a name like Lumentum, or maybe like these smaller kind of chip makers, more specialized chip makers. I think they thrive in a world of inferencing over training. Training is always going to be an important part of the equation, but inferencing is going to become increasingly a bigger part of the equation, and that matters for AI supply chain stocks.
Gotcha. Wow, okay. I mean, even a 10-20% share of Nvidia would still be massive, right?
Yeah, well, that's the whole thing. Is that that's why people are like, "Are you calling for the death of Nvidia? Do you think Nvidia stock is overvalued and bust?" No, no, because you take away just let's do the exact numbers right now. Why don't we? Let me go to Nvidia's financial model. So Nvidia, big corporation. They're going to do they're going to do $200 billion in revenue for fiscal 2026, the year ended January 2026. They're going to do $250 billion in fiscal 2027, which is basically calendar 2026. So next year they're going to do $250 billion in revenue. If they just lose 1% of that, that's $2.5 billion that flows to some other chip makers. These chip makers are probably making 100 million, 200 million, 300
Yeah.
million in revenue. If they just win 10% of that, that's an extra $250 million coming into their income statement. So just by taking a little bit away from a multi-trillion-dollar titan, you create potential 10x, 20x windfalls for these multi-billion-dollar companies. That is what I'm talking about when I say they can win together. Nvidia stock
Definitely.
can continue to go higher as GPU demand remains strong, but they'll lose some share to more inferencing stuff, and that'll create bigger winners in other parts of the AI supply chain. Not to mention, Nvidia stock's really not that expensive. I mean, what we're trading at, um, I think. Let me see here. It's not a big multiple at all. Nvidia stock's at, well, not Circle. Nvidia stock's at 29 times forward earnings. That's cheap. So as long as they maintain good growth, they'll be just fine. But there's going to be other winners in the AI supply chain as we shift to a world of inferencing over training.
Gotcha. Fascinating. All right. So, something else, just to pivoting off of AI that I wanted to bring up was crypto. I know we haven't talked about that on this particular podcast just yet, but with Amazon and a couple of other companies proposing their own stable coins, I think it's something we should mention.
Yeah, absolutely. Yeah, I think it's huge, right? And Walmart and Amazon issuing stablecoins are considering issuing stablecoins at the same time that the Trump administration is pushing through the Genius Act, which is essentially a big piece of legislature that will create a legal framework, finally a legal framework for issuing and operating these stablecoins. That's huge. I mean, you got big government and big retail, both essentially supporting the stablecoin movement. Yeah, I mean, I think it's safe to say adoption is not going to be fast, but I think it's safe to say it's coming. These guys are going to introduce stablecoins into their ecosystems, and they should. I mean, Walmart, Amazon, every time you pull out your MasterCard, your Visa, your Amex, or whatever credit card you're using, and you tap it, you swipe it, you insert it, that's 2 to 3% that's going off to the credit card issuers, right? You go and you buy $100 worth of stuff at Walmart, you tap that card. Actually, I don't think Walmart has tap. I think Walmart's only insert and swipe. Anyways, you go there and you insert your card, $2 to 3 immediately off the Mastercard, off the Visa. You do that on hundreds of billions of dollars, which is how much these guys sell every single year. And yeah, you're talking billions and billions and billions of dollars lost in just transaction fees. So obviously they want to come through and get rid of that lost money, recoup it, and they can do
Right.
that through stablecoins. So that's happening. I think it's huge news. And I think the stock market now offers a way for you to play it with Circle. Circle just IPO'd. They're the company behind USDC, the biggest stablecoin. And yeah, I mean, if you're looking to play the stablecoin trend, Circle is the way to do it. That stock's been red hot.
I think I heard somewhere that Circle, the amount of currency that was funneled through Circle was more than all of the major card companies put together. Am I off base there?
No, that sounds about right. I haven't read that fact entirely. I haven't done the numbers myself, but that sounds about right. A lot of money flows through Circle, and that's before Walmart and Amazon have
Yeah,
even issued stablecoins. Expedia is looking at it too. So is Uber. So it's not just a Walmart Amazon thing. Anybody that does a lot of transactions in a year, especially multinationals, they're the ones looking into it. They're going to lead the charge here. I think it's going to be a big thing in the next 5 years.
yeah, definitely. Wow, it's time to get in. So now want to move on to our exponential stocks. We got
Right.
a couple this week. Some of them are pretty exciting. Some of them we've kind of already talked about. That first one being Circle.
Yeah, Circle's first up. That stock's been red hot, had that IPO. You can see the chart here gone absolutely crazy. IPO price $31. First day pop to 83. Not grinding higher, soaring higher ever since 146. So we've gone 31 to 146 in about 2 weeks. Talk about market's been flat, no money to be made. Well, Circle's up 31 to 145 in 2 weeks. So money to be made. Again, this is the way to play stable coins. The stock is way too hot right now. I mean, way overbought. I don't know if I'd be
Right.
chasing this. Market cap's $33 billion, but they do have a ton of cash on the balance sheet. But anyways, market cap is still $33 billion, pretty big for somebody that's only going to do 2.5 billion in revenues this year. But 50% growth. The growth is there, the firepower is there, the story is there. I like the company, but the stock is too hot for me right now. This is one that could pull back 50%. And if it
Right.
does do a big pullback, get that big pullback, that's when you want to buy in the dip. But I wouldn't be chasing the rally.
Okay. Definitely. And then we got ASTS next.
Yeah, we're talking about ASTS. They've been on a heater. I love this one. Again, also kind of overbought in the short term. We can look at it here. RSI got up to 84, coming back in a little bit, way above the MAs. But the technical action here is gorgeous because if you can see, all the moving averages kind of smashed together here, and now they're all starting to curl higher. That's breakout. To me, that's breakout. That looks very similar to back here in summer of 24. All the moving averages kind of smashed together, and they started to curl higher. So we do have a short-term extension in the stock, but I think this is the beginning of a pretty big move. I've always said this one goes to 100, and I think we are going to 100. Like I think this is the beginning of the move to 100 in the next 12 months. I really like ASTS. I love their technology. I love their team. I love their competitive moat. And I love the business model at scale. This is a very high margin business model. Once they get the satellites up there, they're just collecting royalty revenue or licensing revenue, really, from all the telecom providers. Super high margin, very scalable business. I think this one goes a lot higher. One of my favorite long term potential 10 baggers in the market.
Wow. Incredible. Next, we got a New Scale Power Corp.
SMR, one of the nuclear winners of the last week. Well, really, as you can see in the chart of the last 2 years. This was a stock that was at, let me catch the low, buck 92 on January of 2024. Buck 92. Now we're at $40. So we'll call it 2 to 40, 20x in about a year and a half. Fantastic run. But as you can see, probably the top side of its trading channel right now. RSI really overbought, though now it's down to 65. I think it's got to cool off a little bit, but I love the fundamentals here. SMRs are the future of nuclear energy, especially as it relates to AI data centers. I think for every AI data center they build, they're going to build an SMR right next to it to power it. I think that's the future of construction. So AI data center, SMR. AI data center, SMR. There's going to be a
Right.
lot of AI data centers built over the next 5 to 10 years. There's going to be a lot of SMRs built over the next 5 to 10 years. NewScale is the technical and commercial leader in the space. The growth potential here is enormous. The stock is a long-term winner. Short-term, it's just a little bit extended. Wait for a pullback, but buy on that pullback.
Definitely buy the dip on that. Yeah, for sure. We got another one in the nuclear sector with Oklo.
Same story. Lather, rinse, repeat for Oklo. I just like this one. Uh, I'm not going to say a little bit more. I think it's a little bit riskier, but I like the fact that Sam Altman was involved here, CEO of OpenAI. He has since stepped down to allow them to win deals with other companies besides OpenAI, other AI companies. Makes a bunch of sense. But again, as you can see here, short term super overextended, but I love the long term growth trajectory. SMRs with AI data centers, they're building more micro reactors, like even smaller than SMRs. So that opens up an entire like new market, maybe even residential stuff. So I think that's pretty cool. I like Oklo, again, like SMR, buy on dips, but a high risk stock too as well. So got to be aware of that.
Definitely. Okay. Next we got MP Materials Core.
Ooh, yes. I actually really like this one. It came across my radar the other week. I think it is a big play. Look at how it's gone absolutely straight line. Short term overextended. Wouldn't be chasing here. Would buy on dips, but why would I buy on dips? I think there's a lot of upside. If you kind of zoom out, it's not overextended in a multi. This is breaking out of a downtrend. This is a stock that had a nasty downtrend from 22 all the way to 24, broke out of it. So now it's just kind of breaking out of that downtrend. It's not really super overextended on a long term basis, just on a short term basis. And I think this one actually soars all the way back to those highs of around $60, if not even higher this time around, because humanoid robots. We talked about AI going physical, right? That's the next wave of AI. I'm really excited about it. The centerpiece of that movement is going to be humanoid robots. Optimus, you got one going on over in China with UB Tech. You got Figure AI. You got a lot of companies in this space. A lot of Nvidia CEO going crazy about it, drooling over the potential of humanoid robots. So I think this is a huge space. Humanoid robots need a lot of rare earths to work, especially for their actuators to make them, move like humans. They got actuators everywhere. Those actuators require magnets and rare earth metals. A lot of that stuff comes from China, but MP's here in the US. And I think they're the only publicly traded stock that owns rare earth mining in the US. So if indeed we're going to push forward on this human robotics revolution, we're going to want to do so using US materials, not China materials. This is the play for that. This is your domestic picks and shovels play on the humanoid robotics revolution. I think the stock could be a big time winner in the long run. Looking for a mining play, looking for that kind of picks and shovels play on humanoid robots. MP, I think, could be it. Got to do more research. It's new to me too, new on my radar. But what I've read so far, the research I've done so far, gets me pretty excited about MP.
Well, yeah, that in tandem with the Optimus project from Tesla would be kind of crazy, wouldn't it?
I mean, I don't know if they're going to get an actual deal with Optimus. I think they could. I mean, again, domestic. We want
Yeah.
to source the rare earth metals, the magnets, all that stuff. We want that to have a domestic supply chain. That's a huge priority of the Trump administration. So if humanoid robots do kind of come into the fold over the next 4 years while Trump is president, companies are probably going to look to domestically source stuff. MP is going to be number one on that list.
Wow. Yeah, that's something to look out for. Now, moving on to the last one of the week, it was in your quantum indice. We got a quantum.
QUBT. Yeah, Quantum just been hot. There's really nothing company specific going on here. Quantum just been hot. There's been
Yeah.
a lot of positive commentary. Nvidia CEO Jensen Huang really talked up Quantum at a tech conference in Paris last week. That's what kind of gave life to these stocks. This one's just breaking out more than the other ones. It's smaller cap. I like all the quantum plays: Rigetti, QUBT, D-Wave, IonQ. IonQ is the best. They're the North Star. That's the one you want to load up the most on, in my opinion. But it's so early in the game that I don't think you can just pick one horse and say, that's it, that's the winner, right? Like, so many things are going to happen and change over the next several years as this industry evolves and matures. I think you got to have lots of bets, lots of shots on goal in here. And so, why not buy all four of them? Why not buy Rigetti, Quantum Computing, D Wave, and IonQ? Weight them, have IonQ be the highest weighting, my highest conviction, the best company in the space. But why not own a little bit of QUBT? Why not own a little bit of Rigetti? Why not own a little bit of D Wave? Makes a lot of sense to me. I think QUBT will keep streaming higher so long as quantum commentary and quantum progress remains positive, which I think it will.
Right. Gotcha. Yeah, and then I mean, as far as baskets go, four is not a lot.
These are I'm building concentrated indices with my
Yeah.
emerging tech industries, very concentrated industry. That's why I don't like a lot of the ETFs out there because they're like 30, 40, 50 holdings. And it's like by the time you add all that exposure, like the winners offset the losers and you don't really get great returns. I want
Right.
concentration, right? No one got filthy rich by being diversified. Like that's never happened. I mean, I guess Warren Buffett did, but it took him his entire lifetime. So when you think about people that really kind of struck it rich, it was because they concentrated their bets on just a few number of stocks that went berserk. That's why we're creating concentrated baskets. Space 3, Nuclear 10, Quantum 4, AI Appliers 15. These are concentrated baskets. So yeah, the fact that there's only 4 here, there's a reason for that. We didn't throw in every quantum stock. We threw in only the pure plays that we think have a chance.
Gotcha. Yeah. Awesome. Okay. And I think that is it for our exponential stocks this week. I
Mm-hmm.
want to move on to lifestyle. I want to wrap things up by talking about the Meta AI Ray-Bans that you got. It's been about 2 weeks. I want you to break down how you feel about them.
I zoomed out of screen for you. Am I in screen or out of screen?
You are still in screen.
Okay.
Yeah, now you're back.
Got it. There you are. Do I look more sophisticated?
I'd say so.
Am I there? All right, good. These are awesome. My review, 8 out of 10,
Okay.
9 out of 10. Um, the this is not a new ability, but the ability to take pictures and record videos is super cool because I don't have to remove myself from the situation. When we were in Montana with my family, I had these on all the time. I could record my kids on the boat. I could record my kids at Glacier. I could take pictures of them playing in the river or the lake without having to pull this out and really remove. This is intrusive to an experience. This is
Definitely.
intrusive to an experience. This is not doing this and you just click this button. This is not intrusive. There's a little button right here. This is not intrusive to the experience, to a real world experience. This is. So that's not new. Snap had the spectacles that did that way back in the day. So that's not a new feature, but I do love that feature. The Meta AI that's embedded in here is very useful. You can look at something, you can ask, hey, Meta AI, what am I looking at? You can talk to it about a variety of things. Sometimes I'll be on a walk and I'll just be talking to it about, okay, hey, this happened today. Let's break it down. NVIDIA CEO said this about quantum computing. What do you think? What are your thoughts on quantum computing? So you're basically just kind of like talking to an AI. Now that's cool. It's not a novel feature because ChatGPT on this thing has it. But again, it's all about being less intrusive. Talking with this when it's just on your face is much less intrusive than kind of holding this up and talking in speakerphone and having to use your hand. Like one hand's occupied by holding it. No, just no hands occupied, just on the face. Again, ambient technology, ambient intelligence. That's what this is all about. Not giving it a 10 out of 10 because I think Meta AI is behind ChatGPT. This doesn't integrate with ChatGPT. I would love for it to do that. I'm really excited for what Johnny Ive and ChatGPT are cooking up. But I think that this is definitely a great step in the right direction. It is a great first step. Not the final form. This is the first form. But it's a great step towards the final form, which I think is going to displace these. And actually, Apple's preparing for that. If you saw at WWC 25, the Worldwide Developer Conference, 2025 out of Apple, I think that was last week, they announced Liquid Glass, right? Now, Liquid Glass is their new operating system. First operating system makeover, I think, since 2013, and it ditches the flat screen operating system. It essentially builds off the Vision operating system, the Apple Vision OS, where it essentially has 3D. It's 3D. It's three dimensional. It layers things on top of each other. Come on. I mean, Apple is it's giving you their playbook. They're telling you exactly what they're doing. They are taking their AR VR operating system and putting it on this because the era of flat screens is over. OVER. Flat screens are done. Smartphones are done. These are the next wave of consumer technology. And Apple, with the Apple Glass OS makeover, is prepping its audience for that. They know how to seamlessly transition folks into things, right? It's a really shock and sudden thing if you go from this to this just overnight. No. So what are we going to do? We're going to make this feel 3D. We're going to make the phone feel 3D. Then once you get comfortable with the 3D OS on the phone, then we're going to transition you to the glasses and it's going to feel less shocking, less jarring. And then all of a sudden you're comfortable with it. And then 3, 4 years down the line, why did we ever have these things? This is the future. So I love what I'm seeing in the AI glasses trend. I told you before, I think they replace smartphones in the next 5 years. Apple's announcement last week with the Liquid Glass OS, plus my experience with the oh, I just got messages on my phone and my glasses are talking to me. That's another cool feature. Unless you're on a podcast and trying to keep your thoughts.
Of
But
course.
anyways, I think there are a lot of good things happening with the transition from smartphones to AI glasses. It is underway. I would be invested in that transition.
Wow. Yeah. And you know what is interesting? Apple did drop those, I think the Vision Pros in what was that, mid 2024? So they've already kind of touched water with them putting stuff on our face, right?
Yeah, it's just really interesting that they took the OS from that and put it on the smartphone, basically.
Yeah.
Like that, again, they're just giving you their playbook. It's like the Vision OS was not a hit product. Not a lot of people bought it, yet they're taking that operating system and putting it on their hit product. That tells you where
Yeah.
they're going. They're trying to transition you away from this and towards this stuff. Pretty simple.
It's coming.
It's coming.
All right. So I think great week. Great episode. Do you have any closing thoughts on anything we should be looking forward to for the rest of this week, maybe the coming week?
No, I mean, I think we covered a
Yeah.
lot of ground and a lot of good stuff. There's just a lot of really exciting technology developments happening out there right now, and that is why the market is proving exceptionally resilient to geopolitical and macroeconomic noise because the true durable drivers of value, artificial intelligence, exciting developments in space technology, exciting developments in nuclear, exciting developments with AI glasses and humanoid robots, that stuff is so good right now that yeah, you know what? Okay, we have, some conflicts around the world and we have some
Right.
tariffs and trade negotiations. Like, okay, like yeah, that's fine. I'm okay with that because the rest of the stuff is so dang good that yeah, you know what? Stocks can keep pushing higher. So ignore the noise, focus on the signal. Signal is AI. Maybe at some point the noise gets loud enough that it does derail the signal, but we are far from that point right now. We just have background noise and really positive signal.
Definitely. All right. So ignore the noise. The future is now. Get in on the ground floor, essentially. That has been another week of Being Exponential with Luke Lango. I hope you have a good one.